Good morning, everyone, and welcome back to this new edition of the weekly analysis. Let's try to put things in order and get a sense of everything that's happened over the past few days. We've had 2 days, let's say, basically holidays. Thursday and Friday were essentially a holiday and a pre-holiday, and they didn't offer much in terms of insights, even though there were some important data releases. Anyway, the fact is that the markets continue to be quite strong, quite buoyant. Over the weekend, we then had this new surprise, basically, from Musk with his entry into the field, and so with the formation of this new political party, which, in my opinion, will aim a bit to be the kingmaker, right? In this contest between Republicans and Democrats. And surely, he will focus on those states where, there was low turnout, for the midterm elections. There's the risk that Musk's new party could become the deciding factor in many states. So these are scenarios that definitely threaten a bit the political stability of the United States. But the market right now, AMH seems to have basically no intention at all of worrying about any of this, in the sense that the big cloud is there, the threats are there, but at the moment the markets are quite supported and almost resilient to a change of direction. Markets that remain characterized by low volatility and by volumes, contextualized. In short, that definitely remain low, and the market, in short, is continuing to rise slowly, little by little, but it is continuing to rise. Well, let's say that we can also frame these, for MMH, a series of factors, basically. I've read a few reports about the Wolf Control Fund, which are these funds that basically by mandate intervene. They buy on the market when volatility is low. Usually they rely on two exponential moving averages, one at 90 days and the other at 20 days. So as long as the volatility drops below the 90-day one and the 20-day one doesn't cross above the 90-day one, they keep making these purchases. And all of this, we are seeing it because these funds, the inflows in Shkei, whose exact amount, by the way, is not known, keep, in my opinion, intervening and supporting this market with these purchases that they are required by mandate to make. The moment volatility should rise again, they are by mandate forced to exit the markets. So we'll see. We need to monitor this as well, this additional factor that adds to an already MMH complex situation. Another point to mention is, of course, the tariff situation, which with these announcements from Trump about postponing, has basically postponed the implementation of these new agreements to the 1st of August. And that will be a date when we'll see whether we return to the previously announced tariff level, so the 2nd of April, or if agreements will be reached with these important countries. Because basically we've seen that these agreements, yes, they are being pushed forward, and they are definitely, let's say, playing their part of these agreements with other countries that have already been finalized. But essentially, the important ones have been postponed for now. So the market keeps brushing off this news, these threats that are looming on the horizon, and it keeps going up. Let's say that in contrast to this, besides the buying by the Wolf flu found control, it's also worth noting that right now there are no buybacks from companies because starting next week, the earnings season will begin with the financials. So these Wolf fund control are kind of taking the place of buybacks, and so the market keeps rising slowly, but it keeps rising. So these are all factors, MMH, to take into consideration. As we were saying, the earnings reports will start coming in next week, beginning with the financials. As for the earnings reports, it's important to understand that right now, MMH, because of all these changing scenarios, many analysts have lowered, let's say, their earnings estimates for these companies. So we could easily see many companies coming to the markets that will beat the estimate simply because the bar has been lowered, and then probably, we'll then see a drop in the stock price, because basically the estimates have been lowered. So even if the earnings report beats the estimates, it's essentially because the bar was set low in the first place. This is the point I want to get across to you. So pay close attention to the earnings reports starting next week as well. From a macroeconomic point of view, this week is very, very light. There aren't any significant or important data releases. The only noteworthy events, in my opinion, are 3 auctions of US Treasury bonds at 2, 7, and 10 years. So those could shake things up a little bit, but I think that basically this week should go more or less along the same lines as last week, with a market that tends to keep rising, but without any major surges or high volumes, though it still remains generally set to move upward. Starting next week, there will be some important macroeconomic data. The earnings season will begin. There are option expirations. There's the double witching. So a whole other set of factors will come into play. Having made this summary of what we can expect, let's take a look from an operational point of view, starting as always with the Nasdaq. At the moment, we've seen an opening that was a bit surprising. It surprised me a little, as I was expecting a downward opening due to Musk stepping in. But as I said, the markets right now have no intention of letting go. So there was this gap opening, and at the moment we're working on the weekly WS0, but basically we're still within the BC3 range levels from Friday. So essentially it's a morning where we are now probably waiting for the opening to establish a bit of direction. I would say that on a weekly basis, we obviously need to look at and monitor the initial range areas, BR0 and VS0. And right now we're working a bit below them, because this gap opening has led to a retest of the lows recorded between Thursday and Friday. Now, these 2 days were holidays, so I'm not sure how much strength these lows actually have in stopping a potential bearish attack. But this BC3 level in the 22,880.22, 850 area absolutely needs to be monitored. On the upside, of course, we first need to monitor the weekly VA ECV level, and obviously on the upside VR0 as well, which could provide the basis for new bullish attempts. Let's look at ES. Of course, here it is a similar situation. We're basically resting right on BS0, so essentially nothing has happened yet. Here too we need to monitor these levels, but on the downside, considering the 2 days on a holiday and the other the day before the holiday, we should also keep an eye on 6,270, which is definitely an important level, VS1, because they could easily breach it simply because there was low volume. The same goes for the Nasdaq. An attack on BS1 could easily happen because, as I said, these lows were made on 2 days when volumes were particularly low and not all the market participants were present. Now, let's obviously look at the other futures, starting with the Dow Jones share, which is a bit stronger compared to the Nasdaq and the S&P. You can see it's currently trading near the HV level, with likely attempts to break through the HV level. So we might see it move back into the upper part of the initial weekly range, with possible moves targeting the 45,300 area, which is the VR0 level. On the downside, at this moment, we should also monitor the BC3 level area, which seems to be the one that needs to hold. This also coincides with today's SD2 from the daily string, so this is the area to watch for the Dow Jones on the downside. On the upside, obviously, the first obstacle is this HV level, and then, if not, the daily RDI 0. Let's obviously also look at the Russell. Here it comes. The situation is more or less similar here as well, maybe a bit more robust. We'll see if it can benefit from some rate cuts, if Powell ever decides to do so, but in any case, the Fed is still keeping rates unchanged. We'll see how things develop. Here too, the situation is similar, I would say, to monitor exactly these BC3 levels, with perhaps some extension here as well towards VS1, which could definitely be an important test. On the upside, let's monitor the weekly and daily HV levels, which is basically this area here, and it also corresponds to the VIX area from Friday, with any potential moves towards VR0. Looking at the DAX, this morning it opened a bit stronger. It opened well, basically right at the HV level, tested it, but the market didn't even breach it, and now it's already moving up. We're working above the VR0 level, so we could probably expect, just like it did before, a test with maybe a move towards VR1 or a return into the range with some further testing, probably again at the HV level. Let's also take a look at commodities, obviously starting with oil here it is. The situation is quite similar. We've re-entered the initial weekly range after opening lower. We tested the VS1, which at this point I would consider the minimum level to monitor on the upside. Let's keep an eye on this area, right where we are currently trading, at 67.10, 67.20, because a breakout here could easily push prices to first retest the highs recorded on Thursday and Friday. Actually, those made on Thursday, so around the 67.50 area, and then in the event of further upward moves, possibly target the weekly VR0. Let's also take a look at gold. Of course, here it comes. So let's say gold is currently trading below the level. Look at how many times this VS0 level has been tested, and it hasn't managed to get back into the weekly range. Now they're probably making another attempt to break back in, so we definitely need to keep an eye on this level, this splendid VS0 level, which is now acting as support on the downside. Instead, let's monitor 3.3, 3.28, which is that well-known important support that has already pushed the price back up once more when it was falling. So let's absolutely keep an eye on the 3.28, 3.3 area for gold on the downside. On the upside, let's watch 3.325, 3.33, because it could also re-enter the weekly range and maybe make a move towards the 3.34, 3.35 area, which is represented by the weekly HV level. Now, of course, we still have to take a look at Bitcoin. Here it comes. Well, basically, it's been moving a bit sideways over the last couple of days with a bit of upward momentum as well, going back to retest this area that represents the highs recorded last week. It formed a double top here between Sunday and yesterday, and again this morning at the RD1 level. Is at today's RD1 level. As you can see, the price then returned to SD1, so essentially we're still in a range. We're monitoring RD1 as the upside level and SD1 as the downside level, with possible moves toward these lows around the 107.3 area to the downside or to the upside. Potential breakout of the 109.6 area could easily push prices up toward the highs in the 110, 110, 111 area. Perfect. With this, we've reached the end of this weekly analysis. So please, everyone, be extremely cautious with all these inputs that I try to summarize for you in a video that you can all find on my social channels, so on YouTube, X, Patreon, or Discord. As always, thank you for your attention, and I'll catch up with you later in the chat.